All right, traders, welcome to today's end of day recap. This is Christian from Tribeca Trade Group, and today is Thursday, September 22nd. So another day closer to the end of the month of September. I'll come back to that in just a second. First things first, disclaimer, everything that we're going through is for information purposes only, not giving out any advice or recommendations. So what's the theme of the day? Well, there's probably a few themes that we can go over here, but downside continuation, right? When we look at the Fed days for this year, right, we've seen on average, and I don't have the stats in front of me, but there's been more often than not, there's been a rally on Fed day. And then the next day has been a complete reversal and downside. Well, we didn't get the upside yesterday. By the end of the day, we had a downside day for the Fed yesterday based on more hawkish comments. But we did have the further downside day today, which it just kind of felt that way. Let me just kill this here on my. There we go. Sorry, I just needed to lower my volume on something. But, it kind of seemed like that's the way that the market was heading after hours. I mean, altogether, SPY was down a little bit less than 1%. The Qs were down 1.2%. IWM down 2.2%. And we're going to get to some of the macro moves in a second. But, the market actually rebounded a little bit. Right, when we look at where we were. But yeah, I mean, here's the overnight lows. Looking at the S&P 500, here was the rebound, I guess, which happened around like 4 o'clock in the morning, right around the European Open, right? And that was the biggest move, basically for the up move for the day. Here's the move into the open, and basically there wasn't a ton of things when you look at the overall S&P futures. Now, there were some up moves and some down moves, and we'll go through some of those in just a minute. But, overall, if you were just looking at the index action for the day, there really wasn't much going on from where, again, from where we opened, right, to where we closed. A little bit of a bounce there, and then there was a sell imbalance that brought us back down. So let's back up a little bit. All right, so that's the 5 minute. The 1 hour, one of the things that I talked about in yesterday's video was looking for this to hold, had a trade or two off of this, and, it did not hold, right? And that is the danger. Sometimes when you're dealing with, high volume, which we had yesterday, sellers could push through anything, right? So even though that, this was a pivotal area that I have on my charts, sellers really push through that level. So the trend remains down. We don't have another one of these Virgin point of controls, on the screen for a while. Basically the next real area of support is going to be back to those June lows. Notice that when we look at the extensions away from the September value area, 37.38 would be the next area, but the extensions, right, both on the upside and the downside, are known as more or less speed bumps, right? They're not major support resistance. So that's what's in the cards. We've been heading below this 5-period moving average now for some time. I do think we'll see what I don't think the NIMO is out yet, but we know that's getting pretty oversold. So what's next? In terms of on the calendar. Well, I mentioned that I would come back to the date, right, and that we're one more day closer to the end of this month. Why is that important or significant? Because September is the worst month of the year in terms of seasonality. So I think that, just getting out of this period, you hear me talk about it in just about every one of these end of day videos, that September is a very poor month. That, has to play out, and we've got to get through this month, and then basically go from there, and basically try to get out of this month without getting overexposed and not getting caught in a bad spot, right? That's what this year has been all about. I was reflecting a little bit on, because I cut some trades. I mentioned earlier with that S&P chart, I took a shot on a couple things. I thought that we would get a nice bounce off of that 1 hour VPOC. But the whole key in this market is to understand that you're going to be wrong and not stay wrong. It's happened to me several times this right, where I've had to cut like 3 or 4 trades, 3 or 4 swing trades, right? And it stinks, for about a minute, and then you get over it, and then you you realize that you probably made a good decision. I was talking about that in yesterday's video, right? I was talking about specifically, about having to cut Tesla yesterday, which was one of my favorite positions, right? Because it failed at the moving above the value area. But look at what it did today, right? So clearly I'm not upset about that today. The stock was down 4%, $12, right? And today was the big loss day, comparatively to how it's been trading over the last couple of weeks. So, to leave yourself out of this pain and to allow yourself to fight for another day is really what this market is all about right now to me. It is a very, very difficult market. Again, if you look at this S&P chart, and we're going to talk about some other things in just a second, but I talk about this, bearish, bullish, whatever. We really haven't, if you go back, right, to where we were just a couple months ago in this range, we're revisiting where we were. So, it's important to kind of not get over the tips of your skis with risk, and to realize that, it doesn't matter. You could have been making money on the bullish side as well as the bearish side. And possibly both, right? If you're playing this market, just relying on the technical signals, because again, look at this pattern. It's almost the exact same thing, in terms of the time it took for, once this hammer bar started back on 714, right? That took about a month, right, for us to peak out here, right? And then if we look at 817. Right, so it actually took a little bit longer for us to go down. So, it's just, the reason why I bring this up is it just puts things in perspectives. Puts things in perspective, right? Because when this happens, right, perma bulls do a lot of victory laps. When this happens, a lot of perma bears do a lot of victory laps. But if you're really looking at things, clearly and objectively, the story is that in the last couple of months we haven't gone anywhere, right? And you could be making money on both sides, right? So again, and there's some traders that are sticking to the long side. There's some traders that are sticking to the short side, waiting for their pitch. And there's nothing wrong with that, right? As long as you're sticking to your system, you don't have to waver back and forth. You can be patient and wait for the long setups, because right now we've been trending down now since that time on 8/16, so a little bit over a month, right? We've been trending down, other than this this quick flip up that we had before the CPI numbers. But if you're playing things mostly to the long side, you just have to kind of be patient and wait for your pitch, and maybe that comes as we kind of wrap up the month of September. All right. That's the story there. What's next? And again, you'll hear me talk about this a couple times, but I think it's kind of interesting. Let me put the last day of September in here. But what did we get the last day of September? Right. Well, we get another gauge of inflation. We get the PCE deflator, right? So again, that kind of comes halfway between the CPI and the PPI report. So they're expecting 0.1 for this, and we'll see how this materializes. And again, that's a week from tomorrow. So again, that's something to put on your radar. Why? Again, because you want to be cognizant of when there could be a possible change, right? So if you're short, you want to know what could possibly, derail some of your short trades, right? If you're long and you're waiting for a signal, this could potentially be one. Now, of course, we have to wait for the data, just like we did for the CPI report. This market is very fixated on what the inflation expectations are out. I do like to joke around on Twitter a little bit, right? Just to kind of rehash a little bit from yesterday, right? We're talking about, the Fed was talking about getting down to 2%, returning to 2% inflation, right? Yellen was out today, just a little while ago, and saying that that it may not get down to 2023. I agree with that. I think, realistic. Again, I'm not I have nothing to do with the Fed, but I think everybody's judging what they're doing because it affects so many different things right now. And yeah, I mean, it's not probable, right? I mean, we work with probabilities a lot in trading, but for them to think that they're going to get the inflation back to 2%, like it's like this is no problem. There's a lot of sticky things going on. I was on Benzinga earlier, and I was on with another guest, and was making a great point about the labor market is very sticky, right? It was very hard for many different industries to hire workers. They just couldn't get their hands on hiring workers. So they're in a tough decision now that they've probably got what they need in terms of satisfying capacity. Now, do they really want to start cutting workers when it took so long, especially in the travel and leisure industry where workers were scarce? It's going to be very interesting to see how this plays, and that's why overall that's what is so captivating about this market, right? I mean, everything kind of moves based on all of these different factors, and how these things are going to play out in the coming months is going to be very interesting. All right, so that's a couple things to watch to the for the calendar. We can go through just a couple other charts. So again, like there's other things that we've taken out here. We took out a virgin point of control here as well in NASDAQ futures. Sometimes we do go a little bit farther before we can get a potential reversal, but who knows? We don't have any confirmation yet. Another thing that you hear me talk about all the time is the 5-day moving average, right? Price is still below for all of these. IWM, let's look at this one. You haven't heard me talk about IWM too much. There's been enough that's been going on in the S&P and in NASDAQ. So I kind of have not been analyzing it that much. But here you have another one of these virgin point of controls, which is from this point of control in this time period based off of this volume profile. So that's another one of these taken out, right? And we also had one of these taken out on the 1-hour chart. So, this is a potential bounce spot, right? Even though we're below the 5-period moving average, right? I actually did throw on a small trade for this. Here's the, I show this in every one of these videos. I am super transparent, letting where I make mistakes or where, how I get out of some trades that aren't working. Certainly have a lot of those. But I want to talk a little bit more about, so we spent some time talking about the indices. Let's talk a little bit about single stocks, right? So what I thought was pretty interesting today was a lot of names that have been holding up pretty well got taken out. Right, look at this AXNX, right? This is a medical device company. I've been in this one for a while, made some money on the move up, and had been holding the last piece of the trade, and look at this thing crumble today, right? And breaking the 50-day moving average, right? So out of this one, ENPH is another one that you've heard me talk about that I've been in for a while. This one stopped at the 50-day moving average, but for a swing trade, do I want to go after this on the first test of the 50-day moving average as well as the bottom of value? No, you got to be patient with some of these things. Let a little bit of backing filling if it wants to, but it may very well break the 50-day moving average too, right? So that's definitely on the watch list tomorrow to watch. And again, you could see me cut and run on the last portion of this trade. I hit targets much higher in this one. What else did I do today? Another one, STEM, which I was trying to hold on to. Once that broke support, 16 was my stop, out at 1574. The rest you could see is pretty light trading for me. I did put on a healthcare trade. Notice it's marked as a day trade. That's what I tend to do more often when we're sitting below the 5-period moving average like this. Also, even though that there was some nice strength in healthcare, this chart does not look good to me. You got a flat 200-day moving average, prices below the 50, the 20. So just like everything, just like the index charts, right? This is not showing any relative strength. Could it bounce from here? Of course, anything could bounce, but this is difficult. Just back and forth action here in the healthcare ETF. One name that I'm watching in this group is VRTX. Again, I'm not compelled to buy this thing here. I would rather get a little bit of confirmation that this thing sneaks back above all the moving averages, because if not, right, when you have coiling like this, which usually indicates that a big move is coming, it doesn't necessarily always mean the upside. It could mean the downside as well. And there's a VPOC lingering here. Very difficult, down one day, up another. But I would, I'm waiting for the price to get decently back above these moving averages for confirmation purposes only. What else? Other names that I saw breaking down. Right. Again, these have been the areas that have been holding up very well. Son of a gun, I didn't take this trade. I like Celsius, and maybe I'm a little bit biased, but this thing looks like, it did look like a head and shoulders. And a lot of times we see potential head and shoulders on our charts, and they don't actually form because the neckline doesn't really get broken. This does look like it got broken here, and it looks like it just about filled the earnings gap. Very weak, very toppy looking to me. All right, so that's another one in this space. Shockwave, another one that's been holding up beautifully. Now you could see I've got a trend line drawn here. We got, you could see that it just wasn't giving enough oomph over these moving averages, and that's why waiting for some confirmation helps, right? I get it. Everybody wants to be the first one in there, but sometimes waiting for that confirmation, and if you're really looking for bigger things, like trying to capture the next leg up, you don't care about the first little turn here, right? But look at this thing come under pressure. So I can name 5 or 6 other names like this, but it's mainly what I refer to as, where the money has been gravitating, right? These stocks have been showing, the stocks that I've been going through the last few have been showing leadership qualities, right? People used to say when we would have a downturn correction that it was, oh, well, once the FANG stocks get taken out, right? Those are the leaders of the market. Well, they haven't been exhibiting leadership for some time. They're not the market generals anymore. So I think, do I think that this could be the sign of, seller exhaustion in the short term? I don't know yet. I mean, I think, you have to kind of keep your eye on the ball here and realize that one day isn't a trend. All right. And we'll see if, money comes back into these things, but a lot of these things are either broken or they're testing support in here. A couple other things too. I can't believe I haven't talked about bonds yet, but I will. Crude, right? I've been dancing back and forth with, thinking about whether I want to get, some more exposure into energy stocks. I haven't really had any conviction in the energy trade because notice what oil is doing here, right? Every one of these little rallies that we're seeing, right? You could see these long wicks on these candles, right? That is telling me that there's some selling going on in these things and that the sellers have control in the short term. So that looks a bit vulnerable, right? And XLE, you can see I've got a trend line drawn in here. I don't know why I've got it in red. I don't particularly like red trend lines, but you could see that, that's why sometimes I draw a trend line in here, because it kind of helps you see the pattern of lower highs in here, right? So that's another one. Now you could possibly draw a trend line in here too and say that it's coming to a point, and maybe, we have to see what happens after there, but I don't want any exposure right now while that's trying to figure out which way it wants to go. All right, so let me get into, I can't believe I haven't discussed bonds yet, because I do think that they're very important. Of all the things that we've talked about so far in this video, I find this very interesting that this is the biggest range, I think, since since we saw this reversal bar back in here. So, it's one of the things that I was watching just continuously today. I thought maybe if bonds could bounce, then the overall equity market could bounce, but we didn't see that. And, this is getting very ugly in bonds and where rates are going. So we'll keep an eye on this. Again, always looking for things and for particular signals, but we did not see any bounce in the bonds today. So, as well as the dollar, which didn't have any major velocity to the upside, but it's right there, very close to new highs. One other thing that I saw people noticing today, which I'll comment very quickly on, the VIX was down today, right? Normally, I would say something to the effect of, hey, the VIX is down today and the S&P is down today. That's a divergence. However, I would note that the VIX was like, it went bananas yesterday. So, it even for a second there, it was printing at 30. So, after the Fed announcement. So I wouldn't, take too much of a signal off of this. Because of that big move that happened yesterday. We'll keep an eye on it and see if it shows another signal. But for now, I would just say, keep in mind that it's still at a very heightened level, right? One other point that I was making was saying, hey, for whatever reason, this thing is not above 30, but keep in mind the overall level, right, is a 27. That's indicating, that there's a lot of volatility in the system. Whether or not we go and we break 30 is another, is something else to watch. To note that volatility is going even higher, but currently 27 is nothing to sneeze at in the VIX. So to recap, bottom line, I, cut a couple trades this morning, put on, I will day trade a little bit more while this is going on. I keep forgetting things. Big puts today, by the way, in Dash. This seems like another one of these obvious shorts. Finally, this thing is breaking down. Talk about a frustrating trade, if you've been looking to short this thing, because it just has not wanted to really go down. We saw some big puts going out to January, and I think there was also a May put buyer as well in this name. So that's a potential short. We'll see, tough to short something. When the puts went up, the stock was already down about 4.5%. So it did go down further, but yeah, I mean, the trend looks like it is now broken and moving down. This channel is broken and moving down. For now, just kind of, sitting tight for the most part, and trying not to get overexposed while we get through this very weak seasonal month of September. All right, guys, have a great night. See you tomorrow.